Welcome to this week's Market Talk. I'm Amber Lancaster, joined by Paul Mampilly and Ian Dyer. Each week, we look forward to sharing our viewpoints with you, our readers, and giving insight into what's on our radar. Today's outlook is for the week of April 22nd, 2019. I'll begin by sharing with you what I'm watching, and then we'll hear from Ian and Paul. Today, I'll cover three topics. The first will be my take on the U.S. economic data and earnings release front. The second will be my story of the week. And the third will be the latest performance numbers on the Disruptification Index. The second half of the year for the U.S. economy is shaping up to be a positive one. This forecast is girded by a continued ultra-low unemployment rate and healthy consumer demand. This forecast is also supported by positive economic data releases we saw last week. This past Thursday, the initial jobless claims numbers declined for the fifth straight week. Claims are now sitting at a 49.5-year low. This data points to continued fortitude in the U.S. economy. Also, as seen in this chart, last Thursday's March retail sales exceeded economists' expectations by coming in at 1.6%. This big bounce in retail is the largest increase in 18 months. And retail sales gains were seen in clothing stores, home furnishing outlets, car sales, and gas consumption. And all very encouraging numbers. On the economic data front for this week, we'll see 4 significant data releases. As you can see in this graphic, March new home sales will be released on Tuesday at 10 a.m. Preliminary durable goods orders will be released on Thursday at 8:30 a.m. And on Friday, GDP's annualized quarter-over-quarter initial print for the first quarter will be released at 8:30 a.m. And the final print for April's University of Michigan sentiment will be released at 10 a.m. Now, company earnings releases continue to pour in. Check out this list of some of the top U.S. securities reporting earnings this week per Bloomberg. There will be a total of 200 releases in this group of top securities alone. These companies include Amazon, Twitter, Facebook, Microsoft, ExxonMobil, United Technologies, Ford, Procter & Gamble, Lockheed Martin, Comcast, and Caterpillar. My story of the week focuses on Zillow, the leading online real estate and rental marketplace. Today, Zillow is launching its AI, artificial intelligence-powered 3D home tours across the US and Canada. As seen in this mock-up image, the immersive virtual home tours is called Zillow 3D Home. Now, per the company, this will be the first time 3D home tour technology is widely available to millions of home buyers and sellers for free. In all, per the company, Zillow 3D Homes is an AI-powered mobile platform for iOS devices that allows anyone to capture 360-degree panoramic photos of a home and easily create a 3D home tour. And according to Josh Weisberg, Zillow's Senior Director of Product Development, and I quote, he says previously 3D tours were only found on high-end or expensive homes due to high costs and time-intensive capture process. Now, with 3D homes, adding an immersive experience to home listings is fast, easy, and free, which benefits buyers and sellers at all price points. Also, per the company, according to 2018 Zillow Group Consumer Housing Trends Report, 45% of Gen Z and 41% of millennial buyers find 3D tours or recorded videos of the home are extremely important in helping them decide on their home. This trend only stands to increase given these tech-savvy generations, and they now make up the largest group of first-time home buyers. So moving on to our Disruptification Index, it continues to do extremely well year to date. First of all, as of this past Thursday, April 18th close, the index is up 23.9% versus 13.9% on the Dow and 15.9% on the S&P 500. So that's it from me. Ian, what are you watching?
Thank you, Amber. It sounds great about the economy, and that retail number, the 1.6%, was actually the second biggest number that we've seen since 2010. So that signifies a really strong consumer. And as I've said before, consumers make up about 2/3 of GDP. So with that, it sounds like the economy is still going very strong, and we expect it to continue like that for the foreseeable future. And this week on a disruptive front, I want to talk a little bit about blockchain and cryptocurrencies and how they're really revolutionizing a few key ways of how we live our lives. And the first thing I want to point out is demand is really starting to come back into crypto. And we've seen this on the world's biggest exchange, which is called Binance. On April 2nd and 3rd combined, over 213,000 Bitcoins were exchanged on this website. And that represents about 1.5% of all the Bitcoins in the world. So the fact that this number just happened over the course of 2 days shows that people are interested again in buying cryptocurrency, and shows that this investment isn't going away, and it's really becoming a viable kind of allocation for people to hold, along with things like stocks and bonds. It's really starting to emerge. So blockchain overall is really coming into a few key industries. The first one that I want to discuss is finance. And the way that it's doing this is kind of revolutionizing the way that banks transfer money to each other across the world. And right now, the standard for this is international transfers, which can take up to a week to do, which is obviously really inconvenient, especially when you consider the fact that people using all sorts of things can send money to each other in just an instant time frame. So they're really, to put it another way, they're really making this so sending money across the world can be as simple as an email, where you send it from one bank in China and it can get to the United States in a few seconds. The company that's really leading the pack in this is called Ripple, and they have a product called XRapid that is used to transfer money around the world. So far, about 100 banks around the world, mainly in the US and Asia, are really starting to adopt this technology, see its legitimacy, not only because of the speed, but also it can save them a lot of money. So the amount of money that banks spend on payments or on payment fees every single year is around $30 billion. But with XRapid, they've seen a decrease of 50 to 60%. So they could be saving $15 to $20 billion by adopting this technology. So in addition to speed, it's also a lot more efficient cost-wise. So one of the biggest banks that is a huge fan of XRapid and just a fan of Ripple in general is called SBI Holdings. And they are a $5 billion company in Japan. They actually just partnered with Ripple to create an app for money transfer that banks can use, and is currently being tested by 12 banks in Japan. So Ripple is really starting to have an effect on how institutions and banks can transfer money to each other across the world. Technology that really hasn't been updated in the past 50 to 60 years, and there's a lot of room to grow here. Another technology that blockchain is really starting to advance is how we deal with personal information being stored on things like apps and social media. So instead of having apps on things like Android and iOS, which are centralized platforms that people can hack and steal your information from, there are companies, so a few of the leaders are Ethereum, Tron, and EOS. And these companies are creating something called decentralized apps, which are virtually the same, except they're made on decentralized platforms. So instead of having a centralized server where your information is, it stays on your phone and it's stored there and nobody can hack it. So obviously that has its benefits, and the number of decentralized apps is growing rapidly. So in the first quarter of this year, we saw 503 new decentralized apps come out. And a couple of these companies that I mentioned, Tron and EOS, combined have over 500,000 active users on their decentralized apps, and they're not even on phones yet, really. So once they start to really break into the mainstream, these are going to be really attractive for people to have. And on these decentralized apps, you can use their cryptocurrency. So you can use it to make in-app purchases. You can also sign up to have your information volunteered to third-party services, and in return, you'll get paid in that cryptocurrency. So Tron actually did a study on this. They found that 15% of people using their decentralized apps are buying the cryptocurrency for that exact purpose. So not only is it providing a way for people to have more secure information, it's also bringing a lot of demand into these cryptocurrencies, and it will help push that market forward in the future. So other than the decentralized apps and other than the fintech from Ripple, we're seeing blockchain really start to advance in the way of job postings as well. So from 2016 to 2018, there was a 2,200% increase in the amount of job postings online for blockchain jobs, like blockchain engineers, safety engineers, cybersecurity, things like that. So it's playing into all these fields. And we also saw in 2018, which was a bad year for the crypto market, we saw venture capital firms put $1.3 billion into the top 12 crypto startups. So even though demand for the cryptocurrencies was small, these venture capital firms and big institutions are realizing that these companies are really the future way of doing things. So they're putting a lot of money into them. People are hiring these blockchain engineers. There's huge demand right now in this industry because people are starting to realize that it's really here to stay and that it's not going anywhere because of all the benefits that it brings. And that's all I have for this week, Paul.
Thanks, Ian. There's definitely an incredible amount of stuff just going on really across all of the sectors of our economy. There's really, at least in my lifetime, there's never been a time like this where every sector of the economy you go, everything, energy, finance, consumer goods, there are companies, there are technologies, there are services and products that are blowing up old ways of doing things, blowing up old business models and creating new ones. And the general public, I'll say, if you're not in one of our services, is still going along largely as if the old world will somehow make it, that they will magically find the way to transition from the old way to the new way. However, my reading of history, and I've got a lot of books back here on how innovation occurred, particularly in the 1900s, is that the old got wiped out. They just got zeroed out. Very few of the old ever made it into the new. And you can go back and see there are no horse and buggy makers that made it into car companies. They all just got wiped out. And it's not for lack of trying either. So I'm going to go through my usual roundup, and I'm going to make this quick since we're going long. And starting out with just the macro themes, macro political themes. Last week, if you were reading the news, really the vast majority of the news was political. It was about the Mueller report and people speculating about impeachment, this, that, and the other. And I stay out of politics. However, it is important in the sense that the stock market dislikes uncertainty. And to the extent that there was a possibility that that report had something that was genuinely something that could be used to impeach President Trump, that could cause political instability, for sure you would have seen that in the market, and the market would start to account for that. So I would say from my perspective and our perspective, that's been cleared. This is no longer an issue. And sure, the folks that fight politics as a blood sport will continue to fight over it. However, for our purposes, it's gone, cleared, and done. And when you look at President Trump from the perspective outside of politics, and you look at his handling of the economy and how people view it, the Real Clear Politics poll that tracks all the people that are, all the polls that are done on the subject shows that he has a positive rating by 8.5% on the economy, 51 to 43%. So that's something that is worth taking into account. And if you look at what President Trump has done in these 2 years, he's cut taxes, cut regulations. He's definitely really torn up the playbook on how to run a country for sure. And some people hate him for it, some people love it for it. However, for us, we look at it, what its impact would be on the financial markets. And largely, we can see that overall, the polls at least suggest that they approve of his handling of it. Related is that the China-U.S. trade deal is apparently nearing completion. And so at this point, that is largely in the market. So no one should expect that the market will jump higher when that's announced, because that's really, markets anticipate and discount information ahead of it. So if anyone is making bets on that, they're likely to be disappointed. Now, going to something that I found in the Wall Street Journal, which was very interesting, is that many people talk about China as being this very large superpower. However, if you are a member of the $10 million portfolio service, which is our service that focuses a little bit on international companies, then on special situations and unusual companies, unusual technologies that are in the microcap space, we have a lot of exposure to Japan. And people say, oh, Paul, why Japan? This is like a has-been, China and India, that's the place to be. And we like Japan because Japan has unbelievable technology. They actually have disruptifying technology because they've had to deal with so many of the issues that we are now currently dealing with. Say, for example, in the United States, which is that we lack people with the right skill set for various jobs. So in robots, in automation, and even chip making, Japan is way, way ahead. And so this chart, which you'll see up here, shows that while China gets a lot of the attention for investing around the world, Japan is actually ahead. They have $1.7 trillion in global assets over China. And this is since 2011. And I believe the reason for this is because Japan brings technology solutions. China brings its capital, and then they also bring a lot of things like which are required to employ their people, which is like why they're there. Japan, however, brings you a technical solution that works for you. And also they don't bring their particular agenda, which is Japan is a democracy unlike China. So the other thing that I saw this week, which really kind of blew my mind, which was entitled, once again, it's a Wall Street article entitled "The Kids Are Over It." And I'm only going to put the chart up from this, which shows that it used to be that one of the things that kids at 16 really looked forward to was getting their driver's license. You might line up at 6 a.m. at the license bureau to get it. However, the kids are no longer into driving. And that makes sense in that we are now not quite a decade into Uber and Lyft and people really using their smartphones as the medium to really navigate their lives. And so you'll see in this chart, and the one that blew me away is how few kids are showing up at 16 to get their driver's license. And so some people's like, well, Paul, wouldn't you be worried for Tesla? I'm like, no, because Tesla has sort of anticipated that they are planning to make all of their cars into automated vehicles. In other words, transportation as a service, mobility as a service. And it's also very bullish for Lyft and when Uber comes public, because it tells you that the next big three of transportation and mobility, it's not for General Motors and Chrysler, it's Tesla, Uber, and Lyft. And that's where you'd want to make your investments. Sure, in the short term, there'll be volatility. However, long term, you know that the old car companies are going away and these new ones are going to be here to stay. So now to the stock market. Now the big indices now are at new highs, which seemed unthinkable at when we went through what we went through the last quarter of 2018. And to some extent, it's really being driven by our themes, which is that the companies that are powering it up are the companies of the new, and they're being driven by what I'll call demographic growth. It is the millennial generation, their spending, the Gen Z generation globally that is really driving what is happening in the stock market. So it's what I would call disruptification, to some extent deflation driven by all the technology. And the other secret thing that's powering markets is this pervasive pessimism that's out there. It might be about politics, it might be about the financial crisis. I'll call it declinism. People just believe in that we are in decline, even though technology, we have young people, there's so much exciting going on, yet there's the belief that we are in decline. And to some extent, that's good because everyone is sort of like a little safe. No one is willing to take too much risk, and so it keeps the market safe as well. Last week, big week for IPOs, which we've been talking about every Monday to you. Zoom, which is what we're recording this on, had an unbelievable IPO. The stock zoomed up over 72%. So that was great. Pinterest, which is the social media company that many people use, that was up 22%. Green Lane, which is a vaping company, was up 24%. And Uber, there's more and more information coming that they're going to be coming public any week now. And another exciting one to track is a company called Beyond Meat, which makes what people would call fake meats, in other words, lab concocted meat. So they're planning to come public too. And another interesting side note to this IPO, what is going on with the IPOs is something I sent Ian on, and which is that there's a company called Zoom Technologies, which is different than the Zoom that just went IPO. And you'll see this headline here. So the stock of this, which I'm sure is this penny stock company, is zoomed up by 54,000% in a supposed mistaken identity moment. In other words, people were trying to get ahead of what they thought was the overall market and bought the wrong company and bid it up so high. So we actually think that there's some opportunity here to take advantage of this mistaken identity trade. And Ian and I are going to search for companies that might benefit from that. Obviously, these would be risky trades, but we put it into the $10 million portfolio, knowing that what we're going to do, in other words, we know that this is going to be a short-term trade. However, money's money, and 54,000% is nothing to sneeze at. So popular companies going on in the news. Tesla is having its investor day, and they're focusing on what I was telling you, autonomous vehicles, making robo-taxis out of your cars. So most people are thinking that Tesla is focusing on that because there's some sales slowdown and things like that. Actually, autonomous cars are a critical part of Tesla. And you can see from these numbers why it's really important to focus on it now, because the other companies will focus on it 5 or 7 years from now. However, by then, Lyft, Uber, and Tesla will be so far in the lead, they won't be able to catch up. Also, you would have noted last week that the Samsung Fold was released to mixed reactions. And I'll skip that. You can go to all the bloggers on YouTube and get all the latest news from them. However, what it does show me is that Apple is very conservative in terms of taking on new technology, and other people are willing to push ahead and innovate. And they may do it wrong, they may do it right. However, they're willing to take the risk. And it really is a sad day when Apple is really lagging behind on the market. Want to mention very quickly that my publisher is running a promotion for our Extreme Fortune service. This is an incredible service that's done really well. We focus on small cap companies, very exciting companies, technology companies, unknown companies, and we have an unbelievable AI, big data, blockchain company that we're going to release a trade on Wednesday, I believe. And so look out for those emails where we are promoting that. Last, on crypto, Ian mentioned crypto, and Bitcoin is now closing in on $5,400, which again seemed kind of unthinkable, because when it was at 3,500, 3,400, people said this is going to zero, it's going to 100. And I believe one of the reasons it's happening is because there's global demand. If you look at places like Venezuela, I looked this up, Venezuela's inflation rate is expected to hit 8 million% in 2019, 8 million%. Zimbabwe will have inflation of 6,680%. Argentina, 66%. Iran, 50%. Turkey, which is a fairly well-established economy, will have inflation of 20%. People in these countries are looking for a safe haven, and sometimes these countries block the people in their country from buying up dollars or euros or yen, established currencies that can hold their value. Bitcoin, they can do from their phone, and they're doing it. And I believe this is one of the reasons why the bear market in crypto is now gone, and we're on the verge of a large bull market that takes us to new highs. So that's all I have for this week. Back to you, Amber.
Thank you so much, Paul. Just fantastic information. And Ian, same here for you. Great info for this week. And we want to thank you to our viewers for tuning in, our listeners for listening to us this week. We wish you a wonderful, productive week. And until then, take care.